Hello everybody, hope that you are very well and welcome to this evening's Contenders live stream, part number 2 of 3, going over the day trading strategy. Obviously last week we covered the momentum side of things, and today we're going to be going through the templates. I will be sharing the template with you all, so you will have it at the end of the live stream, as well as explaining the parts of the template, what we are looking for when taking the trades. So you'll understand all of this by the end of tonight's live stream, and then next week is when I will go over like live examples. So saying, right, this is the trade I'd take, explaining how to properly use it in live action, if that makes sense. Because I do think it is one of these strategies that it's a little bit harder to explain and a lot easier to just see me seeing me actually using it and doing it. So yeah, that will be next week, part 3. Today we have part number 2, and we are going to be covering all of the parts, of the strategy. And I am actually really excited for this one, because the feedback that I had even from last week's stream was really good and really positive. So that was before you even have seen it. So yeah, anyway, I'm really excited, and let's get into it. So starting off here, we obviously need to start with a trade disclaimer, as always, the legal stuff. So if you just want to make sure you fully understand this one tonight, and then we will begin. So let's go. Contenders live stream tonight. Going to start off with chart of the week. Then we're going to move on to the day trading strategy, and then as always ending with the questions and answers session. So should there be anything that you would like me to expand upon, obviously that's when you can ask the question. Last week we obviously looked at Ethereum, and I will ask you all again, what do you want me to cover tonight? I'm going to do it again a bit like last week, so I'm going to pick whatever altcoin is the highest selected, and I will cover that in tonight's live stream, just deleting the chart, building it up, and finding a setup on this one. I'm not going to spend too long on it because it's quite a long live stream tonight, so I'll go for it pretty quick, because yeah, obviously the focus is the day trading strategy. So if you guys and girls want to post an altcoin, and I'll do the most highest selected. No votes yet, so yeah, I guess it's a little bit of a delay. So what I will do while waiting for the comments from people is I will show you what happened on Ethereum. Obviously we looked at Ethereum last week, and I expanded upon Ethereum greatly in the Champions live stream, which is obviously from Sunday. So we looked at it briefly last week, and then in more detail on the Champions live stream. And what a prediction I kind of gave. I've already done a video on this, but nevertheless, this is obviously from the Champions live stream on Sunday, where we're looking for the move up to basically complete 1, 2, 3, 4, 5 impulse wave up, A, B, C correction. Okay, and that was obviously looking for the B to complete and the C then to finish. And you can hear what I was saying on Sunday. And then you use your stop loss above whatever the high is. Obviously you don't have this at the moment, but then when you form the 1, 2, then you could get aggressive. Oops. I'm shorting this. Stop above the high here. And then would you look at this? If you start to go down for that third, you then have a left shoulder, a head. So basically, yeah, I'll end it now. But basically what we were looking for was the short off of a rejection of the B wave, and then looking at to play it down for the C. And this is a prediction extraordinario, where you literally, from that, I was posting that here, that we would get the move back up for the B, down for the C. And yeah, I'll show you the confluence that we had here, because obviously that was looking down in advance for the CC. Okay, and on top of the CC, sorry, that was obviously down here at the very low, so from the low to the high into the CC, and the confluence was obviously from the start of A to the bottom of A to the top of B. You then came down with the most perfect confluence ever, CC on the 1-to-1 extension. From that, you obviously have now come back up and actually taken the highs of B. Pretty insane from the CC there. Back up to those highs, 8% in a day, basically. Very good move, and even better prediction. The way I predicted that B down for the C, on looking for that 1-to-1 extension into the CC, and then how it just lined up absolutely perfectly. Yeah, that was a little bit of magic on my behalf, if I say so myself. Crazy good prediction, and how it's actually traded out, getting that rise, getting the drop, and then the rise off of that. ABC, well, it's just amazing. So yeah, I just had to bring your attention to that one once again, because that is next level, really is. So let's see what you all have here then. EOS. I'm going to say there's probably the most EOS votes. EOS, Ontology, another EOS. Yeah, looks like EOS is got the most votes. I can see. Yeah, let's just go for EOS then. For me, it makes no difference. I don't really care what I do. So let's just do EOS. But yeah, let's see if we can get another. I can't remember what I done on the last week Wednesday, but obviously that prediction on ETH was on the Champions live stream. That was really, really good. Let's do a EOS then. Let's delete everything straight away. And let's go over EOS. A little bit of a harder one because it's, well, not really harder per se, but a little bit more boring because it's literally not doing anything. It's not done anything for a very, very, very long time. That's obviously good for range traders, but in terms of a TA, it's pretty easy. So I'll do EOS though. That's what people wanted. So let's begin with EOS. I just saw as I look over, just so we also can see there's a few more votes for EOS. So that EOS definitely won this one. So let's go. I'm not going to commentate it so much. What I try and do is save my voice a little bit. My voice is getting so much better. Every week it's getting better. But if I can save it a little bit, then I'm going to. So we'll start off marking these levels. So those are our high term time frame levels marked out. And I know that the vast majority of people here now have been here quite a few months, so you'll know what's been going on with EOS and how I've been looking at this. It's very much just in a very, very, very nice sideways range from when it originally found a support off the original weekly. It's going on one of the longest ranging altcoins. Period. It had this really, 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 really good range, and then obviously with the fake out of the range, because it looked as if it was going to break up, all it done in the end was go into the consolidation period. Brief consolidation before down, ran into that, rejected, and that once range that you had here, fake out of the range, ultimately came back into it, and it's still ranging, Yeah, it's a little bit unusual to see an altcoin range for so long. They don't generally go on this long, but it's good. I actually prefer ranges than trends. So let's continue. Very, very nice fan that you see here. This was obviously taken originally from this weekly. So the weekly high down to the weekly low. As you can see here, the rejection that you got was off of the 382. Really, really, really nice actually. You got this original rejection off the 382, and then you come into this, and obviously what you were looking at here was this obviously broke out of that weekly. But what you done in the end was you come into that consolidation period, which there's your really nice confluence. The speed fan is a really underrated tool, but it's so powerful. So powerful. I've shown you this so many times how good it is. But as you can see here, breaks the 2.5, 382, 2.5, 2.5, 2.5, 382, 2.5, 382. Back down to the 2.5, bouncing. You see how powerful this is? It really is amazing. And you can see here, this was obviously from the weekly time frames. And yeah, hard to find a tool that is so consistently accurate like this. Very, 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 very accurate. Even to where we are now, still holding the 2.5. Very good. He also probably had the CC going on here now. Yeah. So on that secondary, you see this is like Fibonacci confluence. The CC into the 382 once more. Don't want to delete that. Really nice long-term downtrend channel. As you can see on the this is the high term time frame log channel. What you had was original move down, taking lows, bounce, bounce into the CC. You see how long you spent in the CC? So much time. Man, you know, literally between the 6.6 and the .66. Look at that. That is a range for 182 days. If you include the fake out, nearly a year. Nearly a year-long range going .66, 618, 66, 618, 66, 618, 66, 618, 66, breakout, fake out, 66, holding, loss. Really, really cool. Obviously, still in the long-term downtrend channel. 16% more to the downside, possibly, I'd say. I need to kind of just check and exchange for more data on this. Poloniex. Let's just check something. Okay, this one is no good either. Even less. Bitfinex. Okay. It's the 1-to-1 coming in down there. Wow, look at this then. It's really, really, really amazing. The impulse, the correction, and then you see how precise this was. This is obviously the CC on a standard scale. Sorry, log scale. And then you see the negative dot 236 there, which literally held it to the basically to the sat before you got that 70% rise in price. Very, 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 very technical. Um, this would obviously signify low, but let's just see. Obviously, I'm aware that this is also a 5, but just bear with me. So you then see the negative, how it was support flipped into resist. There was so much confluence actually for that to reject. there actually was. There was a lot of confluence there, let's be honest. History doesn't repeat, but it rhymes. It's kind of similar, but yeah, I would say that you're likely then going to get along this lines. I know this is a little bit confusing now, but let's just remove that. Obviously, I would never have my chart so busy, but you saw what we had for the confluence. I would have to envision that this is going to get another leg to the downside to around this 786, 12%, 24%, another 40%. I think the only way that you're going to get 40% off ETH is, sorry, EOS is if something bad happens to the market, you know. Otherwise, it seems very unlikely that you're going to get that. But I think the 786 is acceptable. Obviously, down at those lows, you do have confluence, but it just seems it's so far off. It's very hard to say, oh yeah, we're going to go down to such low levels for that one-to-one. Obviously, it's never impossible, but it's just so far away for me to. I just wouldn't. Yeah, it's too far away for me, you know. So if I just hide that off again. But you know that you do have the confluence down there, but it is just too far off for me personally. But obviously the 10th of November you have the next time pivot. But what you have locally, I mean locally you just have your range going on. You haven't breached the low, and obviously what piece you're in now, that last piece lasted another like what was it, 180 days, and you've only been 100 days in this, so this can go on for another few months sideways. So you know, this is at the moment still range bound, so ultimately it's still range bound until it's not, trade the range until it's broken. So I think really, although yeah, longer term you could think that this is breaking down, to be fair, absolutely, but for the short term, I think you got to trade the range until it's broke, which has not done so far. You know, you could have tried to short here, wrecked, here, wrecked, here, wrecked, here, wrecked, here, wrecked. You know, why think this time is different? So I would definitely not be shorting where it is now, although it does look for the medium long term, it's going to break down. For here, right now, you got the range, and that's the best you can do. Until you break out of this, yeah, it's just a suicide to try and short the lows here. I know ETH is going up at the moment. Bitcoin is heading upwards. So, I mean, ultimately, if you're looking to trade this range, then you can either, well, you're basically at the bottom of the range, aren't you? So you got the top of the range back up to that weekly, and you got your invalidation outside of the range. So that's what you got going on. Obviously, then you got around the point of control as a really big resistance. So you've obviously got this as your sort of first looking trade, bringing about 7%. Alternatively, for what I would class as a much, as a ultra safe trade, would be if you did get another move off of those lows. Okay, and then obviously you have swing failure pattern the overall low, because that is what you've done. Obviously here you swing failure pattern this low, on this one you swing failure pattern this low, on these two you never swing failure patterns, but obviously now it has breached that last major low before the upside. So one could, if they wanted to, wait for the overall low to be taken, swing failure pattern, and then you've got the exact same setup as you got now. It's just that you got the swing failure on top of you, for even better long, basically. So those are the two that I'd be saying absolutely acceptable trades. At the end of the day, you are trading the range until it breaks, and until you see it break down, it's suicide to short the lows. It's a really, 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 really bad idea. Just as it was really, really bad idea to try and long this high, long this high, long this high. Here it works, but in the end, it failed. Long this high, wrecked. Long this high, wrecked. Long this high, wrecked. Anyone shorting down here, wrecked. So, said it once, said it again. Trade the range until it breaks. Here, yeah, absolutely. I will know this because I did long this breakout, by the way. I was longing the breakout of this one. Go back to my videos around this, probably for the champions, around the 15th of August. I traded this one and I made 60 grand in off of this move. So it was a good time to long the breakout, but obviously ultimately it failed. But nevertheless, that trade was still good. But nevertheless, obviously we've come back down into this range, and now we're at the bottom of the range. I think you've got to trade the range until it breaks. My other high term time frame technical analysis that I've given you today is valid if this range breaks to the downside. That's when I think you look for that 786 to 1-to-1 extensions. But this could be another 2 months away before it breaks down here, if it breaks down. Okay, now those longer term targets only come into play if you lose that low and lose it without a swing failure pattern. Okay, if it just keeps going down, then you don't long it. But yeah, I think at the moment you could go on here another 2 months. So it doesn't make sense to short down at those lows, really, does it? So yeah, there you go. That is EOS for you. Yeah, that actually went on way longer than what I thought it was going to go on. I wanted to make it a little bit quicker. I could probably still do another half an hour on this one, but that would literally be the whole live stream gone. So let's get back to what I wanted to do. Sorry, I wanted to go on there for like 10 minutes, but I hope that you enjoyed that anyway. Sorry, I got a little bit too into it. So moving on, the day trading strategy then. So this is what we are going to be going through tonight. Obviously, let's load it up onto the screen. The templates. This is something that I'll post in the contenders group at the end of the live stream. This is what we're going to be going through. Okay, so you can see we are still moving up at the moment. Let's go. So the day trading strategy, as you'll know, this is part 2, so it is 100% a requirement that you watch last week's live stream a few times before you watch this one. It's just 100%, you just have to watch last week's, because it's absolutely pivotal that you understand that information before you even try and comprehend this information. Okay, so let's go. So the day trading strategy that we have today is primarily based off of volume and reactions. So by volume, I'm referring to what we were looking at last week, obviously our volume chart, when we're looking at the high and low of the candles, when we're searching for high and low liquidity, and we know the strategy slightly differs depending on whether a high or low liquidity. And all of these, for me personally, this obviously can be adapted. I'm not saying this is the strategy, this is set in stone, don't try and change it and go. No, what I'm saying is absolutely this can be adapted to your styles. For me, this is only based off of a reactionary type of trades. What I mean by this is I will never be presetting any bids. So none of my trades using this are preset in the books. I will wait for the reaction and then I'll take the trade. Okay, that's for me a big part of it. But obviously, if you're not a day trader or scalp trader, or if you want to be presetting bids, then obviously you can adapt this and preset bids. But I don't. So obviously this means patience is so So important. Is if you struggle with patience, then this strategy is not for you. And trading is obviously with the momentum of the moves. So I need to take another drink. My throat gets really dry. So this strategy is obviously trading with momentum, and the momentum is gauged in a few different ways that I'll show you today. But it's also highly linked to last week. Okay, so this is what we have the template going on here. So there are a few key components of this strategy. Key components to this strategy are TPO charts. I will be covering TPO in a series very shortly. The next thing that I use within this is open interest. You'll know about that. Volume / momentum, and also Fibonacci. A little bonus is that Fibonacci is soon going to be integrated into exocharts, so you will not need to be leaving exocharts if you don't want to for looking at Fibonacci, so that's a good bonus. But these are the four main components of the strategy. So the day trading strategy. This strategy gives on average between 1 and 4 trades a day. So as you'll know from my Bollinger Band strategy that I've already given you, that is a strategy that can give you 100 trades a day. It gives a lot of trades. I have changed my style of trading where I no longer take 100 trades a day. I am too busy, running chart champions, to be honest. I don't have the time anymore to spend 100, it requires too much focus and it requires too much mental energy to scalp trade like that, which I just can't do anymore. So naturally I have had to adapt my strategy. And this one is a lot more relaxing. Let's put, I guess, like this, like you 1 to 4 trades a day. Okay. Sometimes it's just 1 trade, literally. And sometimes, you might get pushing 4 trades. So it's a lot less trades, but nevertheless still really, really good trades. But yeah, doesn't give very many trades. So that's obviously a bonus and a con, depending on who you are. Don't trade when there is no setup, and this is why I'm saying the patience is so important. If there is no trade, you just have to sit there. And some days you will have 0 trades. And that's just part of trading. On this one, since I've been using it, the most I've gone is 4 days. When there was 4 days where there was 0 trades. And there's nothing you can do about that, but that's almost a week, Monday, Friday trading when you do absolutely nothing and you just are sat there thinking, can something happen? That's just part of the game. So I just want to really stress this. Sometimes you could, well, the most I've had is 4 days, and I've got a really, really, really good eye for this. So if you don't have the eye for this, you could go, easily a week with no trade. But when the trade comes, it's good. But I just want to stress, please make sure you have the patience for this strategy. So what we're going to be looking at is open interest, market structure, and volume. This is showing us the momentum of the move. Okay, I'm just going to change something on my screen. Bear with me 1 second. Okay, cool. So the open interest, the market structure and volume, this is showing us momentum. The Fibonacci is the primary tool for confluence. And these are some of the tools that I've just shown you what we were looking through on EOS. You can keep it very, very simple if you would like, and that is just using a standard Fibonacci retracement. Or you can make it slightly more complex and add in tools such as the speed fan. You've all seen how good the speed fan is. The speed fan, extensions, negative, and expansions, giving you your harmonic patterns. But Fibonacci is my primary tool of confluence for this. And TPO charts and volume tools, such as obviously the pointer controls, VWAPs, value area highs and lows, this is what gives us our entry. So the entries are not based off of Fibonacci. The Fibonacci is added on extra. The actual trade entry is based off of the volume side of things, and then the Fibonacci is what you want to see line up with that. Okay. But this is just a confluence. This is not a necessity. The Fibonacci is just nice. Okay. Momentum. So market structure. This is obviously how are we gauging momentum. So what I like to do is look at the market structure. Here I've put 15-minute, as in 15-minute market structure. Is the market structure on the 15-minute chart making higher highs and higher lows, e.g. upwards, or is it making lower highs and lower lows, e.g. downwards? 15-minute is a really good chart for this because it captures what's happening in the day. As you know, I trade generally London Open to 2 a.m. at night. So, you know, the majority of my trading starts London Open. So the advantage of being a London Open trader, or even if you trade US Open, the advantage of being in the time zone of UK US and trading in the day is that the market structure is already formed during Asian session. So I think that's very fortunate. The Asians, they work out the initial market structure, and the London Open generally is going to carry this on if you're in a trending day, and we like to trade with the momentum. So yeah, 15-minute market structure is really good if you are UK US. If you're in Asia watching this, then it's a little bit harder. I've never traded. I never traded from Asia, so I don't ever trade that session. But good luck for the Asian traders that do. Volume shows the strength of the move. Okay, so what I mean by this is what I was referring to last week. So last week is such an integral part, and that's why I put it in part 1 on its own. When we are looking at the volume, e.g. how much volume is coming in, how quickly it's coming in, the size of the candles, that is the primary way that we measure momentum. So this is why this first part is like quote unquote noob, beginner intermediate way. Like you can, if you still are struggling, and I know this is something that takes time and experience, like you cannot it's really unrealistic to envision you start using this tomorrow and doing very well with it. It kind of takes a time and experience. So this first way is easier, looking at 15-minute trends, whereas obviously what we were covering last week, I think it's safe to say is pretty advanced. To be able to read it on the fly very quickly, no hesitations, you know, that takes time. But nevertheless, that's how I like to judge momentum. That's my primary way of judging momentum, the speed of the candles and the liquidity. And obviously open interest, when we're looking at our net longs, net shorts, open interest, this is showing the aggressiveness of the move, as is who's pushing this. Okay, is it being pushed new longs? Is it being pushed new shorts? Is it being you know, bought up on people closing out their positions? This is very, very, very key way of gauging momentum / aggressiveness. Okay, so Fibonacci. Fibonacci is the primary tool that I will use for confluence of this strategy. Okay, and the 796 in low volume environments. By this we can refer to you know, more trending. In more ranging days. 796. Obviously this .66, the CC is naturally. I felt as if I don't even need to say about the CC because that's really obvious. I'm always going to be looking at that because the CC is like my bread and butter trades. But obviously the 796 is for very good in low volume environments. Okay, and the .28 in high momentum environments. And what we mean by high momentum is when you are getting those trending days. Okay, so when you're in a trending day, and you want to get, you know, if you want to look for those pullbacks on some of these levels, then the .28 Fibonacci is very, very good to get you in, you know, get you involved. So those are the two fibs, and obviously the CC coincides more with you know, a ranging day. And I just didn't feel I needed to mention CC, but you know, those are the three fibs I'd be looking at. Okay, so TPO and volume tools. TPO charts is something I'm going to be covering shortly with you all in a like a series. So this will make sense once I've covered it, you know. So I haven't really mentioned it so much today, but volume tools such as the, you know, value areas, pointer controls, and VWAPs. This is where it gives entry, and I've got some examples tonight, but really next week is when I will show you what I'll be looking for the entries, because I'll go over it literally live in the time, and we will just find entries together. So I think next week we'll make it, you know, bring it all together. TPO charts, this SPs, HTNs. So this is single prints. This is TPO theory. So you got your single prints or high time nodes. I've put here are needed. I guess needed is the wrong word. They're just highly favorable. And reading momentum and context is obviously the most critical. If you follow a strategy that you don't know how to gauge momentum, or you don't know how to gauge context, then you're going to fail, because there is no black and white in trading. There is no this holds, this doesn't hold. There's no, this always does this always does that. No, that's obviously not the case. So if you don't understand how to gauge context, okay, e.g. not buying a pullback when there's an extreme increase in volume and it's looking, there's a lot of momentum to the downside in a bearish trend, then obviously if you're in a massive bearish trend and a big trending day, you're not going to be looking for longs all day, are you? So judging the context of the environment that you're in is a crucial skill to develop. Okay. So what we're going to be looking at in this is, for instance, are the longs or shorts getting aggressive? This is for me, this is a new feature that they've added into Exo charts, and I just think it's absolutely genius. It's very, very, very helpful for if you are in that trending days and you want to be getting involved, or even if you're looking for a range day and you're looking for the pullbacks, knowing who's aggressive, this is judging momentum, is just ultra helpful. So along with this, you're also going to be following the open interest, and that's also judging the aggression of, is it new positions or is it closing positions? So to look at that, we've got this within the template. So it's really hard to do like print screens on Exo charts. Yeah, it's not so nice, but nevertheless, this is what we got. This is the CVD, this is open interest, this is net longs, this is net shorts. Okay, so here what you can see is net longs highlighted as pushing. So this is all within the template. I've set it all up for you. But basically what you can see here is when it highlights the bar at the bottom, this is showing us that net longs are actually pushing. Okay, and this would highlight to you that net shorts are pushing. This is a very big, this is a very big positive on an upwards move. So if you are getting the upwards move, then you are going to want to see that upwards move supported by net longs pushing. That is a very big positive. If you are seeing upwards moves, let's say, and you do not see any of the pushing green bar highlighted, then that's not a good sign. Basically, you really want to see the move up supported on, aggressive longs. Basically, push. If you're moving up and just open interest is falling off a cliff and there's nobody actually getting aggressive on the move, then it's not a move that you want to follow, is it? You want to follow these aggressive moves, especially in like a trending day. So yeah, this is integrated into the template, so there's no manual work there. But this is something definitely that I've noticed you just want to see following these up or downwards moves. Okay, so who's getting aggressive, and it just highlights the bars really, really nicely. Okay, so here what we can see is another example of a trending day upwards, and I'm going to switch over to the template in a second, but these are just a few. Again, it's so hard for me to do this off of like just static examples, so I think it's so much easier to learn this watching me do it. But nevertheless, here you can see a pullback onto the VWAP and DPO, so it's a daily point of control, and this was also the weekly point of control at the time. And this is one of the most common setups that you will get within this strategy, and that is the VWAP point of control confluence setup. And if you get that on a fib, then it's just really great. So basically what you had was a trending day upwards, and then you retrace into point of control VWAP, and the first touch that you're getting off of this gives a trade. Again, this is obviously this is a live one that I taught, but this is a $40 move. Okay, what you can see here is daily point of control, previous day value area low, and session VWAP confluence. So market trending downwards. And as you see this rise, so this is where you start to have to gauge the momentum. So you can see here, what's the first thing I'll ask you this. What do you notice on this move up and this move up? Let's see if you notice it. Because I would look at this and notice it. Let's see if anybody knows. I'll just say, because I'm not sure if anyone will notice. But it's just the delay on the chat is, I think it's like must be moved to like a minute or something. It's a bit annoying. Basically, what you can see here on this move would move up. You're getting liquidations. These circles are highlighting liquidations. So you're seeing a move up. And what do you see? The candles are really big, aren't they? Really big candle, really big candle, really big candle, really big candle. Here it's getting a little bit tighter, but I would say that this move up is not tight. Okay, especially when you start to get at liquidations. And the main thing here is, as you can see, the open interest is heavily declining. So this move up here, especially the first section, is combined with a decline in open interest. So with the open interest declining and the move up in a trending downwards day, you see how this is giving really good confluence of, okay, let's short this bounce. Why are you looking to short the bounce? Firstly, the context is you're trending downwards. Why are you looking to short the bounce? Well, you're coming up on hot big candles. Okay. Thirdly, you're seeing liquidations. Fourthly, you're seeing a confluence of daily point of control into the previous day's value area low into the VWAP. Okay, you see this confluence that you're getting is very, very, very strong. Here you hit the VWAP, you reject, you come back up, previous day value area low, reject, VWAP, reject. And again, this was a live one. But yeah, really, 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 really good setups here. And this is one where I'm going to come over to the chart now, because this is from today, literally today, which was a really perfect example that I have for you. So it's the same idea, and this was a beautiful one. So you can go back into the Champions group today and read through the messages if you'd like. But obviously what we had was the VWAP into previous day, into daily point of control into previous day's value area low. We were trending downwards in the day, and it was the first attempt at the VWAP. Okay, so what I done was I took a short. Somebody asked me, am I shorting it? And so, yeah, I took the short. And then I was asked any targets. My target was the local CC. And to answer somebody's question, it was 10,803. And then I was asked, did I close all my short at the target? And my answer was, yes, I fully closed. So why am I highlighting this to you? Well, it just happened to be that today we were given an absolutely perfect example of the trade. So today it gave one trade and one winner. Why I want to highlight this trade is because of, firstly, how perfect it was. Secondly, I'm not getting greedy. I'm recognizing the targets and I'm closing the whole trade. I'm not holding a percentage of it. I'm not thinking it's going to go down even more. I am shorting and I'm taking profits. Okay, now let's come over to the chart and look at the example. So this was just, I was so happy that we got this today because it was just perfect. That was the original short. And you can see how this played out. So we are obviously in the day trending downwards, really strong downwards trend day. Okay, from the trend, it's the first move up into the VWAP. So we're getting the first touch of the VWAP into the TPO point of control, into the volume point of control, into the previous day's value area low. So much confluence on this trade setup. Then what you can see is if we come over to BTC, we'll go onto the 15-minute chart, and that was taken obviously at the high there. And as you can see, that is referring to this high here. They're going to need to go even down further, 5-minute time frame. And what we can see is if we take our fibs from the low to the high, okay, coming into that CC, obviously the exchange you're looking on is going to be slightly different. This is on Bybit, but what I was obviously saying in this was my target anyway was 10,803, and as you see, we hit 10,803. Okay, so you hit target, and then what is even more brilliant, is hit target, and then it takes up. I actually had 803 because I was taking from this wick, so I was even less greedy, I suppose. So from session VWAP, literally managing to short that, basically at the highs, taking it down to target, which was 10,803, which was obviously the 0.66, and then from that 0.66, well, thankfully I closed out all my trade because now we've rose another 1%. So coming back over to this, what you can also see, and this was another reason why you would identify to close out the trade straight away, because as you see from this low to this low, you actually had some bullish CVD divergences. So you see higher low, but the CVD made a lower low. So you also saw the bullish CVD divergences into the CC. So you see this is giving you a really strong reason to take profits and move on to the next trade, essentially, because you are getting bullish CVD divergences onto the CC, and that would have been your heads up not to short this next attempt at the level, because you are bouncing now off of a CC. with bullish CVD divergences. You see how then that doesn't make sense the next attempt, because then you have literally gone low, high, higher low, higher high, higher low. That's when you get your bullish CVD divergence on the higher low and you break up, as well as understanding market context that Ethereum was breaking up. So, you know, when you start to understand, you know, the correlations between these assets, it just helps. So, yeah, that's I wanted to bring your attention to that. Obviously, 1 second. I mean, next week is when I'm going to be going through. I just want to highlight this, that next week, that's when I will be going through all the examples. We'll be going through this on the chart, and no, nothing hindsight, just saying, right, this will be the next setup, 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 sort of thing. We can go through Bitcoin and a load of altcoins. So that's kind of what we're looking for. You see, basically, let me just load it up one more time. So I guess I should explain here, because the TPO is this section, and I know I haven't covered the theory of this, and that's why it's a little bit harder. But basically, this is the TPO, and this is your volume profile. You're used to the volume profile. This is the TPO, and I just love how this integrates everything into it, because from one template, you've literally got all the information you could need. You got your TPO chart, you got your volume chart, you got obviously the candlesticks, which are based off of volume. This is your daily look back volume profile of the last 2 days and the developing day. This is your delta profile of the last 2 weeks, including the developing week. Oh, it's ultra powerful. So you got a delta profile, you got the TPO, you got volume profile, and you got a developing volume profile of the day. Look back one more day. Then you've obviously got your CVD divergences. You got your open interest, which is linked to net longs, and then obviously you got your net longs and net shorts. And then the icing on the cake on this is that you have also then your high lows. So you can see, you can work out the average of the day, and once you know the average of the day, then you can see, for example, at 9.5 is obviously going to be below average, and 21 that's obviously above average. Then you can start to look at the time that it takes to put 5 million into the market, and then you can start to see your trade counts. And again, that's last week's theory. That's when you can start to see, judging, the momentum, the strength of a move. So you've got absolutely everything that you need off of this, and I just think it's so perfect. It literally is so perfect. For me anyway, it's perfect. So that means me to say is a perfect trading strategy. It's funny that I was saying a perfect trading strategy. Do you think this is a perfect trading strategy? Well, it does not exist. So a perfect trading strategy for everybody just does not exist. It's impossible. The final piece of the puzzle is found of experience. So this really works for me, because I absolutely, I just understand it, and it just works. So for me, this is brilliant. But obviously, if you are at a different level of trading, if you are somebody that can only look at the trade once a week, if you are, there's several different reasons, but naturally this strategy might not fit everybody, and it might not, you can obviously adjust it and make it your own, so to speak. But yeah, that was the that's what I'd just like to say about this. For me, it's pretty perfect, but for you, it might not be perfect, and that's because it might come with time, it might come with adjusting certain things. And obviously, in the next Contenders live stream, that will be part 3 of 3. So next week will be the final week of this, and that's when I'm going to just go through lots of the different examples, because obviously the way that you're looking for the entries off this is a little bit different each time. It's never really the same entry, and that's why it's really hard to say, oh, this is the entry, this is the entry, because each time it's different, basically. So that's why I think next week is really crucial, because I'm just going to load up the chart and just go through. These are my entries, sort of thing. So that's what we'll be doing next week. So just make sure you turn up for that one. It's just really is needed. So then I will say, are there any questions from what I've covered today? There might not be so many questions. I think next week we'll probably answer a lot of that. We'll see if we have any questions, let's say. Yes, we do. So let's see what we got. JH. No. You could do that, but I would prefer to keep it off of what I've found on the weekly. If I want to put a weekly speed fan, then I'm not going to adjust the pivots to change it to the 4-hour time frame. Although absolutely you could do that, and I'm not saying that isn't correct. I'm just saying I wouldn't do that if I want to know the weekly. If I want to know the weekly speed fan, I'm not going to move it to the 4-hour. You know, so although I'm not going to say that's invalid, because obviously, yeah, you can move it then to the 4-hour time frame. But yeah, if I want to know the weekly speed fan, I'm not going to change it then to the 4-hour time frame. So what you've asked is, I guess, personal preference of. I mean, I wouldn't do it, but I'm not saying that you cannot do it because both ways are valid. When sailing, why logs? Basically, if I'm looking really far back, when I was doing that EOS work, I was looking really far back into history on a really, really volatile chart. So you use log scale when the chart's really volatile or looking at historic data. 99% of the time, I'm not using log scale. AKAK. Can you explain the fib pool for the short setter? I haven't gone over any short setups. My US setup was a long trade. I'm not sure what you mean here. I have no idea what you mean. I haven't shown any shorts for Elliott Wave 4. I'm really not sure what you mean because I haven't covered any Wave 4 shorts today. I have no idea what you're on about with that question, to be honest. Nelson, do you move to other time frames or stay on the 15-minute time frame? Well, I never use the 50. This is based off of a volume chart. So this strategy period is the volume chart. So the answer is no. I'd never go onto the 15-minute chart. I wouldn't be going over now to the 15-minute chart because the strategy for me is based off of volume, and that's really, 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 really crucial. So I don't use a time frame on this. I would only use volume. It's very hard to judge momentum off of a time-based chart. Well, you could do, but it's just easier on a volume chart, So, yeah, the answer is no. I would never stay on the 15-minute chart because I'll be on the volume charts. How does... That's a question for Varan, and Varan is in the group, but his calculations for this, I have honestly no idea. I have no idea how he determines it. I just know that it works, and I'm more than happy with that. Yeah, this is obviously a question for the developer. I have no idea his calculations, but all I can see is that it works. But in terms of how he's calculated it, I think he has wrote it before, but it's one of those things that I don't really care how it's calculated. But yeah, just at Varan in the group and he will tell you. He will tell you, but I have no idea how he does it. If it's... I could do that, I suppose. That's another thing that I could do. Just do this or... Well, I'm just going to do it next week. Easy. Then you can ask me questions, see how I'm doing it. Although that is obviously something I could do as well. But, yeah, I can do it next week and... I can also record videos throughout the week. Cool, let's see if there's any other questions. Just seeing if there's any more. Going back to where we were. Cool, there are more questions. They are just coming in now. Just downloading them. Again, I guess I can just say yes. It is probably going to retrace back to that VWAP. Why is the odd number .789 and .229? That is because that is based off of what I gave you with the CCW setup. Okay, that was obviously this. So that's obviously was with the 28 and the .789. I refer you back to the CCW setup live stream where I covered those fibs. What do the wavy lines on the net? So this is showing you to like the percentage changes. So this is I do know. So here you can see like this is a decline of 0.52%. And this is 0.16 percentage increase. Okay, we've just moved up 0.1% increase. So this is like showing you the declines and rises. Just yeah, it's pretty neat, I suppose. It's yeah, it's just showing you like the percentage moves off of those. Well, not necessarily the last 24 hours, from the last session. Obviously, the session starts, 12 p.m. So the TPO will start at the daily open. So obviously, if you're 1 hour into the daily open, it will just take the last 1 hour. So generally, when I start trading is London Open. So I'll have about 8 hours of data. Tendrías que comprobar la configuración de conexión en la aplicación Google Home. Okay, sorry about that. I'm not sure even if you heard that, but that was Google. Yeah. So basically, the answer to that was sorry. That really threw me off. Yeah, it starts from the daily open, and the good thing for that for me is because I trade London Open onwards, I already have 8 hours of data before it starts. Which volume chart is the best to do this on? 5 million. Yeah, I really like the 5 million. It's not too large, it's not too low. You can adjust this in the day depending on volatility. So if there is a lot of volatility in the day and you are on a really, really strong trend, yeah, you can up this to 10, 15 million. But generally 90% of the time I'm on 5 million. Unless it's a very, very strong day, then I might up it to 10 million. But 5 million is just, I'm on that the majority of the time. 5 million is a really, really, really good. It's not too low and it's not too high. It's just very easy to judge, judge the strength of a move. 5 million is, yes, good one. You can change it, but the majority, you don't really need to be honest. So there is a theory about when essentially yes. You would, that would make the level stronger. If the time point of control is lining up with the volume point of control, then yeah, it makes the level even stronger. So you are generally going to want to see them line up as for confluence, yeah. Let's just see. I think that is all the questions. Yeah, you can export from you can export all the data from XOCharts put into an Excel. I'm actually yeah, basically that's what you can do. You can export it all of the data. It's pretty easy. You can export it all to a CSV and then obviously take the row of the average sub periods of each candle and then just work out the average. I can share with you another strategy. But yeah, that's basically the easiest way. You can just export the data and put it into Excel and then just run what's the average of this column and it will tell you. So yeah, you can export all that from Excel. No problem. Really do have lots of bots in here. Essentially, if you are seeing a move to the upside, okay, then you just are looking for momentum play, because you have to remember these trades also that I'm taking, they could last 5 minutes. You know, they just because I'm only taking one trade a day, my one trade literally could last 5 minutes. It could last 2 minutes. So it's this strategy is not something, a trade that you do, for me anyway. It's not a trade that I'm going to be holding 24 hours. So it's a trade that generally the trade is going to last me 5 minutes once I've taken it. You know, 5 minutes, few hours max. So it's not something I'm going to be thinking, oh, I'm going to be following the momentum, and then you know, is this momentum going to end in a, you know, a stop run, etc. It's not so important. Obviously, at the end of the day, yeah, a lot of net longs lining up together, but they might get stopped at some point. But that's not really what you're thinking of in this, for me anyway, in this strategy. It's more of a quick in, quick out sort of strategy. So it doesn't really matter if they're being used as fuel or not. You're just trying to follow the fuel, I suppose, that's getting you to that point in the first place. So I don't think it's really that important overall. If is it being used as a fuel for more downside later? It doesn't really matter to you, I suppose. Absolutely, yes. So you can definitely look for, if there's a reason, if you believe that you've hit a low, a good low, and you're looking for the trend change, then absolutely the answer is yes. So let's say that you believed right now that this was a pivotal low, and you believe, of this is obviously based off of other technical analysis, if you believe that was a pivotal low of the day and you have now changed market structure, then absolutely you could then now be looking to buy that old resistance as support and flip it, you know, up to levels such as the previous day point of control. But yeah, that would be an acceptable thing to think. Like, absolutely yes. Yep, there you go. That's another way that you could adjust this. Do I have statistics for? No, I don't. To be honest with you, I don't. I know that ExoCharts literally added this about maybe about a month ago now, but I have not been following it enough to build up a statistics to tell you 60. Like, well, yeah, I to be honest, I just don't have that, so I cannot say I do. But I haven't. It's not actually something that I've been looking to. I've not recorded this, so I cannot tell you a percentage of the time. That's not something I've recorded myself. All I know is that it's really good to see it come with it, but yeah, I don't have a percentage to tell you on that one. 10803. But you mean on this bounce? So I think with this, you do have to view the context of the market, like the overall market. So here you are getting a bounce, but this bounce was fueled, and this is why context reading is really important, you know, because here this was fueled off of bullish CVD divergences. It was fueled under the context that you were getting strong move up on Ethereum. That just adds also obviously to bullishness when you're getting the move up on ETH. You were coming down to value of the day. Okay, obviously overall here you are still making on a higher term time frame higher highs and higher lows. Okay, the whole move is characterized by higher highs and higher lows. This is also a low that one would say, you know, if you're focusing on market structure, you have to think, if this goes down much lower, it's going to break market structure. That's obviously very bearish. So you're coming down to a point that has to be, like, pretty much has to be defended by bulls. And if it's not defended, you know, it's really likely that it rolls over. So it's a level that's like one of those levels that just has to be defended, or it's game over for that side. Just as 11,000 was a level that had to be defended by bears, because if you got through that level, it was game over. It would have shot up $1,000. So this isn't quite as extreme as $1,000, but nevertheless, it's still a level that had to be defended because of market structure. So you got to expect a fight to be put out there. And then when you start to see the bullish CVD divergences locally off of a CC, yeah, one would say that this yes, it obviously starts off with a little bit what this was made in really, really, really low volume on the initial. So this was obviously a really initial week. This was weak, let's say, because this took a long time for that volume to get injected, and it was obviously a really big candle. So that you can say safely there weren't that many interested market buying here. There was obviously somebody sat with their limit orders, but for the market to get underway, this started off slow, but it's ground up really nicely. You've then got your tight area of consolidation, and now it's starting to push on again. So I would say when you're reading the context of where you are and why you're bouncing, then in my opinion, it's absolutely fine. I'm basically off of BitMEX. I only trade on Bybit now. Like 99. I still have money on BitMEX, but basically I'm off of BitMEX. I basically only trade on Bybit. Yeah, I'm basically off of BitMEX. Open interest is picking up on this last period, but yeah, overall this move is obviously on declining open interest from the low back up to the high. So yeah, one could say there's conflicting signs. So this is where you have to be in your zone. It's really hard for me to it's a little bit hard for me to commentate on moves, but nevertheless, you have a bit of conflicting signs. I think overall you got to expect a bounce. Like if I'm put here on the spot hours, I would say you're going to get more of a bounce. Judging off of what the context you have here, judging that you have grinded down all day, and the market's now recovering, along with ETH recovering, along with this was a massive important support that just had to be defended. I do think that you're going to push up to higher levels. Yes, that is on the declining open interest. But nevertheless, I would still expect more of a higher test here. Okay, there's been no swing value pattern rejection. You just had a little bit of consolidation. You can be looking for the daily open, previous day point of control. I would expect more of a push, judging off the context. You cannot just base it just on this decline is on open interest, because yes, this decline was on open interest, but if you look from where it started to, this rise was on declining open interest, declining, and now it's picking up slightly here. But yeah, you're right. This rise is on a decline in open interest. But in the context here, I personally don't think that's massively important under the context of why the context here is that we've reached a massive pivotal support, and bears have got really bearish at support, and they've tried to short heavily support. And so naturally, the rise is always going to be on declining open interest, because the rise is a short squeeze. You're rising because shorts are closing. You see? I'm going to have to wrap it up because my throat is starting to feel this. But you can understand that the move up here is acceptable on a decline in open interest, because this is basically a short squeeze. You're primarily moving up because shorts got way too aggressive down here, and now they're closing out. They're closing. People are closing their shorts. This is either people taking profits on their shorts, or this is people just being like, oh wow, I'm underwater, this is a really bad short, and now they're closing their shorts. So the decline in open interest in the context is not important, because this is a short squeeze. No worries. I'm happy. And I don't want to cover the wave 4 on Bitcoin. If I'm honest, I don't want to get into covering Bitcoin analysis anymore on today's video. I'll cover that for you over in the chat. But for this purpose of this video, I don't want to cover my Elliott wave count on Bitcoin. But I'll cover that for you in the Discord group in give me 15 minutes. But for the purpose of this video, I don't want to add it in. So yeah, there you go then. I hope that you have enjoyed today's video. I will go back over to this and wrap it up. So if we go back over to here, ending obviously with a summary, and that is momentum gives trade direction, volume gives the entries, and Fibonacci gives the confluence. And I guess what I would add on to this is context, because I think that was a really good example of the question of the decline in open interest. But if the context is you're short squeezing, you have to rise on decline in open interest. So you can see how that is massive context dependent, because if you are rising in price and open interest is declining, and you cannot work out that this is obviously caused from a short squeeze, then naturally you're going to be like, why is this rising? You know, it's kind of confusing. So context is so important. I guess it's not context this, but it's just experience and reading and understanding of the market and why it's moving. Massively, massively, massively important, obviously. So yeah, there you go. That was tonight's live stream. Obviously, next week we're going to be going over the examples. I will try and record some trades as well. I cannot promise this during the next week, but after Wednesday, I think I will try and do it and like moving onwards, because it just makes more sense to do it after Wednesday, because then I'll actually be able to commentate, explain, and do the questions and answers. So I probably I'll be honest, I won't do it until next Wednesday. So then you can join in on the live stream, and then going forwards I can do it, you know. Makes sense. So yeah, I'll catch you all next week in that live stream. We'll be going over real trading examples live in the moment, and finding those setups, how I would take them, the entries, the exits, the stop losses, etc, etc, etc. That's what you can look forward to in the next Contenders live stream. I recommend you watch this one a few times over, as well as last week's again, might as well. And yeah, catch you next week. Cheers everybody, thank you and goodbye. Cheers.